Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up. This is your weekend edition, by the way, for Friday, the 13th. Whoa, Jason, come on. And it is just about 4:40 in the afternoon. So we had a big rally in the stock market today. Let me tell you, when you get a bear market, and we're in bear market territory in the stocks, you get rallies of this type of nature. It is not uncommon. Does it mean the overall trend changed? Well, we'll go to the weekly charts to figure that out. You know that the House Speaker Pelosi, they're coming up in the House with their own plan. They don't agree with the president, apparently, on much of anything. The president declared the state of emergency. That will bring out $50 billion in funds, he claims, one way or the other. The FOMC meets this week, and we're about to get more bad news, I'm sure of that, over the weekend as to how the COVID-19 virus is spreading through America. By now, you know, sporting events have shut down, restaurants are shutting down. AMC, the movie chain, they said they're going to cut seating capacity by 50%. So I'm assuming that follows the rules like in New York, that if you have a restaurant of under 500 people or under, they only want you to be half full. So we'll see what goes on. Schools closing, and now we've got to be able to see that if people have to do extended leave at home, is the government going to come to their aid? And of course, student loans. It goes on and on. You could read about that in the news. But let's go to the charts and let them do the talking. On the monthly chart, you came back a little. I had a first drawn the line there. So for the month, and we're only midway through the month right now, we're down about, 8% or so, as you can see in the market. You've got a slice in this market that's horrendous to the downside, just keeps going. This was where the market had been. This is an area chart of just closes, so it came back a little. I wanted to get it this morning down here to see where the market finished up, and it's interesting. As you can see on the break, unbelievable in its size. And remember, it made back on a daily basis 10% today. I don't see anything friendly on a chart like that. And when I put on the swing line study, I've got lower highs, lower lows. So I'm respectful that you're getting a rally in a bear market, but that's all that I'm seeing. I see the market is fighting a battle against the 200-day average of closes. It did get up to the 18. You can see that as well. But it's well under, this is the 100-day, I'm sorry. The 18 is up here on that. You're still very much in bear territory. What else happened? You got under the Bollinger Band. What's the importance of that? 95% of the time, be it on a daily chart, be it on a weekly chart, the market will stay within the Bollinger Band. So the close today, the Bollinger Band, as you can see, is still, you're under it. There's room here to try to get back over it, but you've got a lot of resistance. The 100-day average is just waiting for the market right there. When we take a look at the market in terms of momentum, on the weekly chart, it's still pointing down. So the trend down, the bias down since you're under the 18-week average. It's doing its best to get back in the Bollinger Band, but I don't see anything on this chart to end this bear trend. In the NASDAQ, it's very similar. In the NASDAQ, let's take off this right here. You would come in with a higher high, lower low on a weekly basis. Now, if you take out this low, it's actually last week's low, but if you take it out, watch out. I would have thought you'd look for support right through here. And what the market did is it found that if you really consider that by the end of the day, here we are at what is that, 79.15 zone, right over that lower Bollinger Band. There's nothing bullish on the chart. I think the bears are going to be waiting for the market if it gets up towards that 18-day average. All it did is pull back into those bands. When we come to the Dow Jones Industrials, lower highs, lower lows. And by the end, we were up here at the 2801 level, let me take that back, 22.9 level. Well, you're still under the Bollinger Band. I'm looking on rallies between right here at the 200-day average to get over it, but you're still under that band. There's nothing friendly on these charts. As a chartist, what I teach is not to go short under a lower Bollinger Band, but the trend is down. On the Russell, this state of a collapse in this market. You're sitting here down pretty hard, as you can see, under the Bollinger Band, fighting. That's where I'd expect the battle to be fought, trying to get back over it. Nothing friendly at all. In the VIX, up and away. So you finish off the week here, rather dramatic fashion. You got up to 77. You didn't stay there. You're trying to get back overall into this Bollinger Band. You're up around right here now, but I could see that next week. Think of the sideways action in the base that's built under this market. Remember, these are weekly charts. Look at how you've left that base. That doesn't just go away. It could. Anything in life is possible. But as a chartist, nah, I don't expect that at all. In the 10-year note, interest rates soared. Did they get ahead of themselves? Well, by the end, it looks that way. They got over the upper Bollinger Band for these 3 weeks, and then by the end today, the market closed back under that band. Now, another thing that's happening is momentum is turning. So are we going to get back to a more normal rate? And was that like a peak? You know, we got down to crazy numbers like 0.34. I don't know. I do know we have the FOMC meeting this week. I know they're going to come out probably with their bazooka in some manner. They did it for the repo market on Thursday and Friday, where they added 1.5 trillion. And they have other tricks they can do. Are they going to take interest rates down to zero? I don't know. When we come to the dollar index, if you think you can trade this, I wish you the best. But you came from these lows to a new high, to a new low, and right back. And by the end of the week, here you are at 98.76, back up and over everything. I'll let somebody else try to trade that. I find that impossible. In the eurocurrency, this one, at least I can make an argument. You got to the upper Bollinger Band in the 100-day average. That's a lot of resistance. And you fell back into the support of the 18-day average. But are we trending? No. You have a lower low and a higher high. Let somebody else do that. Canadian dollar, that's a breakout to the downside, a very ugly breakout to the downside. Now, at the end, we finished around 71.77, well under the lower Bollinger Band. I'd be waiting as if you were my client saying, hey, I don't like selling under the Bollinger Band, but I'd also be telling you the trend is down, and it looks to me like we have a major top in place in this market. Japanese yen on a weekly basis, you popped up and right back down. Wow. So you're looking at a market that got to, what, 98.87, and you're down 6 cents from that on the close. I'm laughing because it's hard to trade those. All right, and Bitcoin. Bitcoin was fighting a battle coming into this week. It had a pattern of, if we look at it, a higher high, and if we come back to this low right here, this week's low, the low of that week was 82.35, right? So the market had come on a correction over the Bollinger Band, coming back down, and it gets to the 84.80 level. Now, if you take this out, you got a problem. And the reason you have a problem is you might have the higher high and a lower low, literally into the 18-day average. I didn't see this coming, but I saw the end of the uptrend right through there. This is just something that took me back startled. You're down 41% in Bitcoin for the week. Gold and Bitcoin just came out of, people didn't want to own either. And when you look at the differential between Brent and WTI, well, you're down to $2. This is a market that was comfortable. It was up to 7 in December, started to slip. Remember what we talk about, relation? That's why I show this. Here's the 18-week moving average of closes only. That's your neutral point. Often I'll tell you, markets like to play at that average. Then it slipped here, so it threw itself back into a downside bias. You don't use this for trends. It's either bias up, down, or neutral. And wow, what a differential in that. Now, Brent, down hard. Momentum down, trend down, but you're under the Bollinger Band, and the one thing I teach is you don't sell under a Bollinger Band, at least I teach that, and we'll see if the market moves to the right-hand side of it. WTI, the president can buy all he wants. He said he's buying crude. What he didn't say is that they're not selling out of these strategic reserves. He put that on hold. Now he wants to buy more oil. Okay, I guess he wants to help the oil industry out. But this market on a weekly basis, all I'm looking for is a move to the right-hand side. Everything's still bearish on it. Gasoline market, I'm looking for it to climb back into the Bollinger Bands, but I see a downtrend with downside bias. So when I put it all together, this is one heck of a week. And what I've done each day is I have gotten up early, and I think I've really given my subscribers really a lot of information to digest, a lot of chart analysis. And the idea there is confidence and sometimes words of wisdom. I've been around for the '87 crash. I've seen the '90s go crazy. I saw dot-com bubbles burst, all of that. I've got a lot of experience with this. I bring it to what I see on the charts, and I bring this up to you. There's a time when I tell my subscribers, don't trade. This is not a market for the retail client. This is the market for the people that are sitting there in these high frequency and they're moving so fast you don't know what's going on or why it's moving. It slows down. Everything has a beginning, a middle, and an end. This too will come to pass, and that's my words of wisdom. And I'll tell you where I think when you enter, why you enter, what you should do, where the stop is. Doesn't mean I'm going to be right, but it doesn't mean I'm going to be wrong, and I'm bringing you that idea. And I cover these markets in this exact sequence, and if you watch them on my website, and you don't have to. At the beginning, you'll notice that I had my phone there, and that was actually our phone. And we give you all this. You can watch it in our phone apps as well. But on the website, we'll have a slide bar, and you can jump from section to section. Makes it really easy, and there'll be a lexicon on the side to do as well with all that. How do you get this research? Because it's out to you. I record it about 5:40 in the morning, Monday through Friday. So how you get it is simple. You go to our website, under the word research, you'll see that I do charge $7.95 for 30 days. Come on. After that, if you think it's worth it, it's $15 every 30 days, or you can buy a 1 year up front for $156. Just go to www.iraepstein.com, research, and take it from there. I'm Ira. You have a good day.